I'm Justin Llewellyn-Jones, and this is the Thing About FinTech. And we basically doubled the size of the company in 3 years.
It feels like a 30-year overnight success story.
It doesn't matter how good that product is or how good the company is. If you are just philosophically at odds with the company that you're acquiring, it's not going to work.
If you don't do that, you're going to get stuck in all these bespoke little deployments, and that's going to be really hard to evolve from.
This wouldn't be 2026 if I didn't mention AI. Right?
Welcome to the Thing About FinTech with me, Anvar and
Toby. And today, very excited to introduce you to Justin Llewellyn-Jones from Trading Technologies. Justin, how are you?
I'm great, thank you. Welcome to TT.
Lovely to be here. Welcome to the UK to you as well. Fresh in from a late night flight last night, and doing very well on it.
Thank you.
But you're a better man than I.
Highly caffeinated.
Yeah, exactly right. Listen, thanks so much for coming on the show first and foremost. I think this is a fascinating business. You're in a fascinating spot. Last year, you probably crammed more into a year than any company in the history of companies of all time. We'll come into all of that. We'll talk a little bit about your sort of role, what the company's been doing, acquisitive over a number of different years. And then also the sort of challenges that sort of come into the space. So I'm really looking forward to this one. Thanks for joining us. Justin, give us a little bit of a background first and foremost to Trading Technologies for those who don't know, and to yourself.
Sure. So let me start with Trading Technologies. So we're not a young company. We've actually been around for 30 years. For 27 of those years, we were very much focused on what I think of as sort of tip of the spear execution, and very specifically in the futures and options space. 2021, we were bought by a company called Ridge. They had an investment thesis around expanding TT's footprint across a number of different vectors. We call it our multi-X strategy. Mm-hmm. So the vectors were things like asset class, jurisdiction, workflows. And then from 2021 through to 2025, we drove that strategy, built out an order management system, acquired a middle office system, introduced FX and fixed income into the platform, introduced data and analytics into the platform, and we basically doubled the size of the company in 3 years. And then in 2025, we were recapitalized, so we took an investment from Thoma Bravo, who now own 50% of the company.
Yeah.
So I like to say I have two dads. So we still have Ridge involved with 50%.
Yeah.
We have Thoma Bravo involved in 50%. So it's a nice triangulation between my two investors and TT. And then we're doubling down on that multi-X strategy. So going forward, the vectors, asset class, workflow, geography and jurisdiction, we're still pursuing those.
And a really sort of interesting thing for you to have come in from, because your background in some of the biggest vendors in the capital markets, but space, moved into here in 24 as the COO, transitioned to CEO last year, in 2025.
Yeah.
So it's been a journey for you as well.
Yeah, it has. Yeah, I started my career at a very small fintech company here in London, a company called Wilco. But I like to joke it was back in the day before the internet existed, so you had to physically go to places to install software. So I was lucky enough to sort of travel around the world to a variety of different cities, doing exactly that, installing software. And then in 2001, ended up in the US, where I then finally transitioned to Fidessa in 2004. Was there for a decade and a half as they grew their footprint in North America. Yeah. And then eventually we were bought by Ion in 2018.
Yeah.
And then 2019 transitioned into Broadridge. But I've always really kind of flirted between the technology side of it. I'm a ex-programmer at heart, although I don't think my team would let me anywhere near the code base nowadays. And then products. Very, I'm a very product-centric individual. I like building products. So in Broadridge, running a couple of businesses, but also the Chief Product Officer for capital markets.
Which I think is a wonderful sort of movement through to a CEO.
Yeah.
And I'm seeing that more and more often from the conversations I'm having, where you're seeing people who've walked in the shoes of that product role, who've then been really well positioned to become a CEO? Because I think it gives you that sort of real customer mindset, which I think is so important.
Exactly. I think particularly in fintech, the software companies or product companies tend to be very oriented around delivering the same product to all of their customers, right? That's how a software company scales. Financial services technology is a little quirky in that a lot of customers look to differentiate themselves through the technology that they're providing.
Of course, yeah.
So I think you have to be very engaged with your customers to make sure that you kind of understand the nuances of their business and then how you can manifest them in the product. And it's a real balance, right? You guys know that for a lot of years, fintech was about custom builds, right? It was on-site enterprise software deployed, customized to the client's needs, not very scalable. Profit margins were oriented around kind of people, body shopping, people, professional services. And nowadays, I think the world we exist in has changed so that the products have become much more open, configurable, so you can provide a product to many customers while still being able to kind of encapsulate the nuances that they need to differentiate themselves.
That sort of thing you've been saying, right?
That's an incredible challenge, to take effectively these bespoke workflows and creating a product out of that. And I think that's really a big differentiator, because as a technology provider, if you don't do that, you're going to get stuck in all these bespoke little deployments, and that's going to be really hard to evolve from.
It's a real danger, and you see lots of little or smaller fintech companies falling into that trap, right? Of doubling down on an engagement with a large customer. Next thing you know, you've customized your software; it's no longer supportable. But I think that the modern technology ecosystems that we exist in today really help firms account for that, right? Back when I started, we were creating these sort of monoliths, right? You created these sort of large single server, single service solutions which did everything, right? You had an order and an execution management system that did allocations and affirmations and it did the whole kit and caboodle. For one asset class in one geography. And then you had to buy another one and another one and another one. But the sort of component-based or services-based architectures that we live with today are very malleable, right? So they allow you to create a platform with components and products within that platform. And then if you need to do a slight tweak for a particular customer, well, you can create a microservice that is for that customer. And that means that you're not customizing the entire platform and product set. So I think the advances in technology this last sort of decade, particularly when it comes to sort of cloud native solutions, have really helped in that sort of paradigm.
And we've seen a lot of that, haven't we? Where there's been more companies pop up in the space, a lot of smaller companies come through with innovative ideas and struggle. I remember going back 10, 15 years and there was a lynch mob for a fairly large tier one bank. A friend of mine came in to speak to this group, and it was quite a start-up group, and everyone was talking about procurement, which has been difficult for people. And then they looked at it a little bit further and said, right, well, it's always going to be the same when you're talking about the procurement in tier one institutions. And actually, I think now people are getting around that a little bit by partnering with people. You've made some investments into some exciting, innovative businesses within the space as well. And that seems to be a sort of new paradigm in the sector as well, right?
It is. I think the sort of governance, risk, compliance burden is not going to decrease, right? It's only going to increase. The cyber threats aren't going to decrease; they're only going to increase. So the standards that a tier one institution, actually not just a tier one, a tier 2, a tier 3, a tier 4, because there's all of the regulatory oversight as well, things like DORA and so forth. They're very high now, and if you're a small fintech company, it's really tricky to be able to kind of get over that wall and onto the other side and be accepted by procurement, audit, security, cyber, data, all of the checks and balances that these institutions have in place. So if you can partner with a company like TT or anyone who's already gone through that process, and you can adhere to the sort of ISO standards and the security standards that we impose, right? We have to impose those same standards on our partners as we receive from our clients. That is an amazing outlet for those companies. As I said, I'm an ex-developer. I think it's a little soul-destroying to watch all of these great small companies with really innovative ideas and some great products, but they just can't get them to market. They can't get a footprint. Because as soon as they do get that footprint, they quite quickly get themselves established and start growing. Yeah.
What does that partnerships model look like for you? Because there's been some investments that have been made.
Yeah. So we have three sort of capital allocation models. There is one bucket where we're just growing. We're investing in our own R&D. Yeah. We're growing our own products. We're growing our own solutions. The second one is acquisitions. Yeah. As you know, we've done a number of acquisitions. And then that third one is partnerships. And partnerships can sort of take the shape of an investment. So we may find a company that we like the look of, we like their products, they sort of adhere to our philosophies and our mindsets, our culture. I think culture is a very important part of it as well. And we'll take an ownership stake in them. And others, because we have this sort of open architecture, again, modern technology, open APIs, what we might do is simply connect to them using an API integration, and then we allow them to leverage our distribution network. But in each instance, that sort of audit, security, oversight is the same. So what we don't want to do is be allowing a partner to leverage our distribution and our MSA and our data centers and our cloud footprint if they don't hit the same kind of standards as we do. We just have the capacity to fill out all the questionnaires and respond to the CISOs and interact with the audit committees at these banks. Whereas those smaller companies just don't.
As well at the same sort of time, isn't it? Yeah.
Because we have this great distribution. I mean, we have a couple of hundred sell-side clients. We have hundreds and hundreds of buy-side clients, and in each one of those engagements, we've had to prove to the customer that we can meet those same standards. So having done it multiple times, it's far easier to do it one more time. Yeah,
because we talked about that, the importance for fintechs of doing that work up front, whether through a partnership model or on their own, because once you have all those boxes ticked, the procurement process becomes much more natural. Whereas if you push that to later, you're looking at 12 months of just questions.
And routine seems to be more common sort of.
And you're right. What we find is that once we've done it a couple of times with a partner, they can then continue and do it themselves. Right. So they learn that muscle.
It's also the runway, isn't it, to an extent? When you look at the cash flow issues around smaller businesses about where they can go through, and they haven't budgeted for 18 months worth of doing it. They do have good products which they believe in. It's an interesting conundrum for people to deal with, and I think this whole model seems to have been the answer for people to look at things in a slightly different way and recognise actually there's a route forward for it.
And our customers come to us as well. We have partners where an existing customer of TT has brought that partner to us and said, listen, we would love you to be interoperable with this partner, and we'd also love you to host them within your four walls, so they benefit from your security stance, and you benefit from they benefit from your sort of audit and cyber and so forth.
And I think that's an interesting part when you talk about the culture of making those decisions, because obviously that can be an awkward thing if it's not the right cultural piece for you at the same sort of time when it's customer orientated. But you've as you said, look, there's a lot that happened last year with you coming in to the CEO role. Another investor, the second dad coming into it, or acquisitions. It was Open Gamma last year, wasn't it? And So when you're looking at all of those sort of things, and you've got multiple different geographies now, if you just said you were back from a road tour that I've been watching on LinkedIn, as you've been out in India, you've been out in Singapore, you've been in Chicago, you've been in London. I love the fact that it's been very involved. So culture is obviously a clear part of the strategy for you guys, and making sure that when you've got 6 acquisitions in the last few years for a business, there's a lot of coming together and getting that right, which a lot of companies don't always do. Yeah. It seems to me that that's always been a good thing, along with these sort of strategic investments. I think they've been deemed. There's a lot of change around that, and culture is an important part of getting that right. I've heard very strong feedback on how that's been happening from I guess the jungle drum sort of play. But tell me a little bit about what you've done to make that work. So it must be deliberate, right? No,
it very much is. I think both myself and the former CEO Keith Todd are very big believers that sort of culture eats strategy for breakfast. I think that's the quote, right?
Thank you, Drucker.
And you can't just hope that happens, right? Because it doesn't. Yeah. You have to be very, very deliberate about ensuring that that you have the right sort of thematics and approaches and mindsets and values within your organization, so that people can drive towards the same sort of cultural viewpoints. Yeah. So when Keith took over in 2021, late 21, he drove a few transformation projects within TT, which were just making sure that all people, including consultants and contractors, so not just full-time employees, everyone who was interacting with TT had that same philosophy, the same mindsets, the same values, were customer-centric, really understood that we wanted to be adding value, understood the customer journey. And then what we've done is we've taken that forward. So every year, as you say, we do these regional kickoffs. We go around the world, go to every major office. We present the plan. We talk about the product initiatives, but we actually then spend time. At least half of these kickoffs are about reinforcing the culture, reinforcing the values, reinforcing the mindsets. We do little workshops, get feedback. We talk to people about what our thought processes are in terms of ensuring that it's not just the leadership team who are culture carriers, it's everyone within the organization as well. And then the other part of it is acquisitions, right? So it's one thing having an existing footprint of employees and you're adding to that organically, and they sort of, it's almost like the Borg, right? You're assimilating them into your thought process. But when you buy a company like Open Gamma and it has 60-odd individuals who are overnight suddenly TT employees, well, how do you ensure that they understand it as well? Now, when we're looking at acquisitions, it's not just about financial due diligence and technology due diligence and functional due diligence. We actually spend quite a lot of time on culture as well. Because I think if doesn't matter how good that product is or how good the company is, if you are just philosophically at odds with the company that you're acquiring, it's not going to work. It's going to be almost impossible to consolidate that organization into TT, and we're not a portfolio-based company. We're a platform-based company. So we're not looking to run a whole bunch of different organizations separately. It's one platform. All of our services are being presented to the clients through one platform. So everybody is interacting with each other. So we're quite deterministic about the due diligence that we do. And there's been a couple of occasions where we've hit organizations where the culture just isn't a fit, and we have walked away.
So what makes the right culture for you?
Well, I think
when you look at the due diligence on certain aspects financially is a fairly straightforward process.
Technology is the same thing. Functionality is the same thing.
Culture is so much
very binary,
isn't it?
It really is. And I think you have to look at so our first mindset or philosophy is being customer centric, right? So I don't think you can be successful in what we do unless you really understand your customer journey and you really understand your customer's business needs and requirements. So if you are a product organization and you're inward facing and you're creating a product and you have really no interactions with your customers whatsoever, that's the big red sign for me, because I think you don't have that mindset that we need, which is that customer centricity. Second one is service excellence, right? Where we sort of approach the world that we live in from the perspective of we want to deliver the best possible service that we can afford to deliver. Right? That's our thought process. And again, if you encounter an organization which really has no service or customer success people, well, it's like, oh, okay, so
that might be a problem.
So how are you delivering this service? And then there's just some other very simple ones, things like ease of doing business with us. You know, we don't want it to be difficult. You know, we're not trying to con people into contracting with us or making it tricky to understand our master services agreement. You know, we want to be seen to be adding value, right? If we can't describe the value proposition, then, you know, or the company we're acquiring can't articulate the value proposition, well, again, there's something wrong, right? So we look for these sort of almost alerts where we're looking to see or a mirror. You know, are they mirroring our approach, our thought processes, the way we take product into the market? And if they're not, then why not?
It takes a bit of kissing frogs to get to that sort of stage.
Absolutely, absolutely. And we have a very we have a pretty defined approach to acquisition targets. So we've mapped capital markets. We understand where we want to play. We understand where we want to partner. We understand where we want to buy versus build. You know, we've sort of mapped it out in terms of who exists in that kind of ecosystem. And there are names within those sort of segments where we've just put a line through them and said they're not for us, not really the kind of organisation that we think is right to join the TT platform.
And you mentioned the sort of two dad aspect there of those companies, and it's an interesting sort of play, isn't it? Where you've got two investors in there, a company that's been acquisitive into all of that. I think so important is that relationship between investor and the company themselves, and everyone being on the same sort of page. And sometimes when you've got businesses, there can be competition or conflict about where people want to go with all of that. I've heard, again, good things about both businesses, and that seems to have been a really good marriage as well, right?
I think it's remarkable. It's quite unique in our industry. You have Severn Ridge, who have very, very deep capital markets experience. You have the principals there who have worked in banks, who've worked at vendors, providers, who really, have decades of experience of sort of understanding the whole capital markets ecosystem, but have a philosophy around the future and how the technology is going to evolve, and the sort of the rails around capital markets are going to evolve, which I fundamentally agree with. So I've got one organisation which brings that deep expertise, has a real view of where capital markets is going in the future, and is so convinced by that view that they are investing in it. Right? They are putting their money where their mouth is and investing in it and pushing that forward. And then you have Thoma Bravo, who have deep expertise in driving sort of operational excellence in software companies. And they've done it more than 500 times over the last 20 years. So
that's extraordinary, isn't it?
So you've got. I get the benefit of having these two philosophies and approaches, which drive different aspects of my business. And then TT comes to the table with a best-in-class technology footprint, a very modern cloud-native footprint, and 30-year pedigree of really understanding capital markets execution, order management, and driving that forward.
Yeah.
So it's quite a unique combination of parties. Yeah.
And it was a business that was going, relatively, strongly over a long sort of time, and it's, it feels like a 30-year overnight success story, doesn't it? where you look at it, but that must be quite a change as well from all aspects of the business. I mean, it wasn't a small business 10 years ago, but the last 5 have really accelerated.
Yeah.
And that in turn creates its sort of opportunities as well as its pressure points around that. But again, it seems to be navigated pretty well.
Yeah. Whereas we were saying before, there's a little bit of a cult around TT and from the traders' perspective, right? So 30 years of doing this, but it was really focused on futures and options execution.
Yeah.
And that is a very defined addressable market within capital markets. So I think what Seven Ridge did was that they blew that open to really look at everything else that TT could do.
Yeah.
And fundamentally, the workflows around execution, order management, allocation, they're not different. There's that kind of 80-20 rule. 80% of what is happening is the same across asset classes, across jurisdictions, across geographies. It's just important to get the 20% that is different right.
Yeah.
And the expectations of a trader sitting in Singapore trading equities versus a trader sitting in Sao Paulo trading futures are very different.
Yeah.
But under the hood, about 80%, I would say, of those workflows are the same. So Seven Ridge saw that opportunity.
Yeah.
Saw a very well established, very successful vendor that was servicing a particular segment of the market and said, well, you know what, we can take that technology and blow it up and actually go after all of the segments of the market.
Yeah.
And I think that is why we've seen the growth. It's why we're continuing to displace our competitors and continuing to grow.
Yeah, and I guess on that topic, with those backers, and we talked about culture, that naturally sets you up for innovation.
Yeah. And
how do you see that kind of in the future going forward?
So I mean, this wouldn't be 2026 if I didn't mention AI, right? So there's a lot of focus on AI at the moment. There's the AI internally to TT in terms of our product engineering, so spending a lot of time on introducing that into our SDLC. But we're also spending a lot of time looking at AI as what I think of as the sort of next evolution of automation.
Yeah.
There's obviously regulatory oversight in terms of what we're doing, highly regulated industry. So we can't just throw AI agents left, right, and centre and let them start making trades. Not going to happen. But what we can do is we can look at empowering the human. So we're looking at hybridization. So I think over the next 12, 24 months, you're going to see more generative AI rather than agentic AI coming into our solution, in terms of upskilling the trader around decision making, upskilling some of the existing automation tools around decision making and action. We're going to continue to invest in that multi-asset, multi-X story. I think there is less human traders, and those human traders are expected to do more. So the more consolidation of system we can allow, the better, because that then allows the trader a consistent workflow, a consistent interaction. And then we're going to continue to add workflow and component tools as well onto the platform, continue to open up our addressable market to new solutions and new components. Interesting.
We did a pretty contentious episode where there was no innovation in fintech, wasn't it? And
sorry to interrupt that, but there are certain companies that are not innovating. Right? And that is the truth.
I think the argument was right, is this evolution or is it real innovation? And what does it, got quite, theoretical around what actually innovation meant. But I think for me, it's this, particularly around AI, there's this, there's a lot of noise over the last couple of years and a lot of positioning and posturing. And sensationalizing around various different parts of it, but that ability, where I think you guys have been, from what I know, have been positioning it, is the absolute augmentation piece and giving ourselves the opportunities to make better and quicker decisions and improve outcomes for customers.
Yeah.
And I think that realistically, when people get that absolutely right, and what we're starting to see with that, that's a fundamental change that I think really shifts everything further forward.
I think so too. I think evolution versus revolution. You can,
Yeah.
But if you think about what is inhibiting a trader today, it's really the ability to ingest information quickly and make decisions, right? Whether that's a human being or a system.
Yeah.
Right? And what Gen AI is allowing us to do is go from hundreds of data attributes to hundreds of thousands of data attributes. It's allowing us to look at unstructured data in a different way. Right? So it's no longer, or you'd have to have a very structured data platform that these automation tools can interact with. Throw in a Fed statement, throw in a satellite image of some oil refineries, throw in some shipping information, and that is now capable of being pulled into what are probably existing execution paradigms. Right? We're not necessarily changing the way that a trader or a trading system is choosing to trade, but we're just giving it access to so much more information in a timeline that is just remarkable. If you think about benchmark algos, it used to take weeks, months to back test a benchmark algo, and maybe you were interacting with a couple of hundred data attributes while you were doing it, and some historical market data, month, 2 months, maybe a year of historical market data. Now there are providers out there that can give you access to decades worth of historical market data, right? And you can approach that in a matter of hours, and you can retrain a benchmark algorithmic model on hundreds of thousands of data attributes, right? Across decades worth of data. It's just a totally different approach. Now the underlying execution is the same, right? You're going to VWAP it into the market. The training and the modeling has completely changed.
And it comes down to the productivity aspect, doesn't it? With costs increasing and margins getting smaller, it has to come through productivity gain. And I've had some interesting conversations about how quality and speed, if you think about the whole thing used to be about latency and speed, and that was your advantage, that was your alpha. Realistically, that ability to mix it with, you see this all the time as well in your world, mixing it with the quality and the data, the quality of information, the quality of data, all of those sort of things, that becomes an equal advantage. And I think that to me feels like the future of where things go for people in the space.
But equally, as a technology kind of vendor, the 80-20 rule, if you can decrease the time it takes to deliver that 20, that's a big lever. Reducing that loop from client feedback to seeing impact on the platform. That's a big transition forward.
It's one of the benefits of a modern technology system. A lot of vendors talk about continuous integration, continuous deployment. That's actually very hard when you're dealing with older technology. Same with AI, right? Sort of actually making your data available. If you're sitting on a mainframe-based system and you're trying to get the data to be available to a large language model, that's actually, it's not impossible. It's just hard. Whereas I think the vendors or the technology providers that are creating technology today, they have all of the advantages. There was a phrase I heard at a conference the other day that was, AI is the worst it will be today. Right? It's only going to
Exactly.
So having the technology to be able to take advantage of these innovations is where you need to be.
So listen, we could all be talking for a very long time about all of this. So let's finish off with just one last thing about where we sort of alluded to this a little bit, but where the company goes over the rest of the year. It seems like it's been a pretty exciting couple of years for you and the team. What have you got lined up for 2026 and beyond?
So 2026, we're going to continue to add asset classes into the solution and market connectivity. So the two vectors I talked about at the start, or two of the vectors, were asset classes. FX, we're launching at the moment. Fixed income, we're expanding in the first quarter. And then we're looking at jurisdictions where we can do better in terms of coverage: India, China, some of the tertiary and frontier markets as well. There's also a big push by our customers to actually stream their liquidity directly into the platform, especially OTC products. So we're opening that up as well. Our view is the more liquidity that we can get onto the platform, the better. It means that the traders only have to go to one place to trade. So that's a big part of it. And then workflows, sort of expanding order management workflows, allocation, confirmation, affirmation. Again, just making it simpler to automate around a single solution. And then finally, back on AI data, we think data and analytics are really going to be part of that next sort of evolution in capital markets. So whether it's things like open gamma and margin analytics, collateral, capital, risk, we're going to continue to either buy, build or partner in that space, pull all the data into the platform and then use that data to really automate and drive workflow.
Fantastic.
Yeah.
Well, there we have it. Justin, absolutely brilliant. Thank you so much for coming on the show and talking to us. It sounds like it's just an amazing time for you in the business. So long may it continue.
It's very busy.
It certainly sounds it. And well done for keeping the eyes open all the way through this as well. Thank you all for watching, and we'll see you soon on the next episode of The Thing About FinTech.